So we are doing the trade receivable budgets. Can you tell me what is a trade receivable?
A trade receivable is your debtors who owe you money.
Trade receivable are debtors who owe you money. So when
Yes.
you make a trade receivable budget, so it is going to estimate amounts owed to the business by credit
Yes.
customers at the end
Yes.
of each period. So at
Yep.
the end of each period, how much money your credit customers have to give you back. Okay, it that is the thing that the trade receivable budget tells you. So at
Hmm.
the end of each period, what is the amount that the customer owes you? To know the amount that the customer owes you, we start with the revenue budget. Okay,
Hmm.
so how much have we sold? What is the credit customer credit terms that will allow us to calculate the amount that the customers owes us every month?
Hmm.
Now I want you to read this question, okay, the worked example,
Yeah.
and see what is it telling.
Okay. Ethan Edward has produced the following revenue budget.
Okay, so this
24,000
is
units.
revenue.
Yeah.
So we have revenue for Jan, Feb, March, April, and May.
Yep.
Okay, read ahead.
Okay. Do you want me to go through the units?
Each football shirt.
Okay. Each football shirt is sold to a wholesaler for £55.
Okay.
Payment is received on the following basis. 20% of wholesalers pay cash with the order.
Hmm. Okay.
50% of wholesalers 50% of wholesalers pay by check within the month of the sale.
Okay.
30% of the wholesalers pay by check and in the month after the sale. You are
Okay.
asked to prepare a trade receivable budget.
Okay. Fine. So,
Hmm.
20% of the wholesalers, they are selling 24,000 units, right?
Yeah.
20% of the wholesalers, they pay full cash.
Yeah.
Okay. 50% of the wholesalers would pay us within the month
Check.
of sale.
Yeah.
Okay. Within the month of sale, they are going to pay us. And 30% of the wholesalers, they are going to pay us 1 month after sales.
Hmm.
Okay. So at every point of time, um what would be our balance that is being the begin down balance? Can you tell me that?
Your balance brought down is basically your trade receivables that are yet to be paid.
How much?
30% of the last month.
30%. So if you are in the month of January, what would be your balance begin down?
It would be zero because there's no information, right?
If you're in the month of February, then
You'll have 30% of 24,000.
so 30% of 24,000. Okay. And what about the remaining 50%?
They'll have cash and check.
My cash and check.
Okay, because 20% of the wholesalers they pay cash with the order on the spot, then
Okay.
50% they pay within the month.
Okay. At the end of the month.
Okay, at the end of the month.
So they are paying in that month only.
Yeah,
Okay. So if I am making the trade receivable budget at the start of Feb, what would be my balance begin down?
at the start of Feb it would be 7,200.
How 7,200?
That is the 30% of 24 units. So yeah, okay,
24,
the
24,000
1,000
into
units
dollar 55.
into 55.
So the
Okay,
balance begin down would be how much?
396.
Huh?
396.
2,500 into 55 is how much?
Okay, wait, 24. 1,320,000.
I don't
But
know what you are saying.
Miss 1,320,000.
24,000 into 55 into 30%.
हाँ तो उसका आता है 396 मिस.
396 what?
Thousand.
396,000.
Yeah, 396,000.
Okay, fine. Now, what have you sold
Sold 50%. I mean no, 70%.
in February?
Oh, in February, yes.
See,
So
January, in we cannot calculate for Jan because I don't have anything else. So I will
yeah,
calculate for Feb, March, and April. Are you with
yeah,
me?
yeah,
Okay. Now, in the month of February, okay, for the month of February, I would have the balance begin down. That
yeah.
would be my Jan sales 30%. Yeah.
In your which?
In the month of February,
Yeah,
my balance begin down would be the Jan sales of 30%.
yeah, which is the 396. Yes,
Okay, fine. Apart from this, in the month of February, I would do credit sales also.
yes.
This
So
credit
it would
sales
be
would be, yeah,
70% of 20,000 units into 55.
70% of
Uh,
20,000 units into 55.
yeah, that
Comes
gives
up to
you
how much?
770,000, 770,000,
Think properly. Calculate properly.
770,000.
20,000
Okay, wait. 20,000 into 70%
into 55
into 55, which gives you 770,000.
into 70%.
No, miss, I already did 70% for the units.
Hmm.
So it gives me 770,000.
Are you really going to take 50%? Because the 50% are the people who are going to immediately pay you. So I will still take 30%, right?
What, miss?
In
But,
February, I will sell 20,000 units, right?
oh, yes, yes, these guys will pay you in this month.
From that, 20% will pay immediately.
तो मिस 100% आएगा ना फिर? Like
30, 50,
30% of 24.
50% are going to pay by the end of the month.
Yeah,
So
yeah.
the credit
So
sales of February would only be 30%.
February, yeah. Wait, miss, wait. I got it. So 30% of the first month. So
30% of the current month.
no, miss. Last month's January will be paid in this month, right?
The first, this is last month's January balance begin down will be there. This month
Huh,
you've
okay.
again done a credit sales of how much? 330,000.
How? How?
You have 20,000 units that you've sold.
Yeah,
20% of that is going to pay you immediately.
yeah,
50% is going to pay you by the end of the month. So they are not credit sales at
yeah,
the end of the month.
yeah.
So again, credit sales for the current month is only how much? 30%
Uh,
of 20,000
30%,
units into 55.
6 into 55. That would be 330.
Okay. And then in this month, you're
Okay.
again going to receive the money of the January sales.
Hmm. That is 770.
Yeah, darling, January sales 396 you're going to receive now, na?
Okay, yeah.
So
So,
that
okay,
is
you'll
then.
subtract it. Huh.
So your closing balance will become how much? Your balance closed down would be 396,
Hmm.
330,000.
330.
See, at the start of February, you would
Yeah,
have balance 30% of Jan sales brought down
yeah,
because they have not paid you in the month of Jan. They will pay us in the month after sales.
yeah, February.
Okay, first understand this part. They are going
Yeah,
to pay us in the month after sales. Then in this month, February also, 20% pay us immediately, 50% are going to pay at the end, so 30% will pay us next month.
yeah, I confuse credit sales with sales. Yes.
Yeah. So
Okay.
receipts now in the month of February, what I will receive is the January sales money.
Yeah, so that will give you your total credit sales,
This will give,
basically.
I will receive my Jan sales money. Now
Huh,
this
yeah, you,
is the balance closed down. So at the month of February, I have to still take money 330,000 from my customer.
yeah.
Now for month of February, March,
So
the
that's it,
opening
miss. You don't take into consideration because it's
trade
only trade
receivables,
receivables.
yeah, only
Yeah,
the
yeah, yeah.
credit sales.
Okay, got it.
Now in the month of
So
March, what is the opening balance?
opening balance will be 330,000. Then the credit sale would be again 30% of 30,
30% of 32,000 units into 55,
which will give you 528,000.
528,000.
Yeah. And then you subtract 330 again.
You will receive the February month balance.
Yeah, so again your balance carried down would be 528.
For April,
Balance brought down would be 528, and then your credit sales would be 30% again of April, right? So 28,000 into 55, 462. 462,000.
297,000, right?
How? Wait. 30% of April. April got 28,000 units, yeah, into 55. 462.
Okay, so the marking scheme is wrong.
Yeah, 462,000. Then you receive your 528, and your balance carried down would be 462 again.
Okay, so this is your trade receivable budget. What does it show? That how much you have to receive from your customers at the end of each
End
month.
of the, yeah,
This is wrong, okay?
yeah. So
Are
what
you
about May,
with me?
miss? May you don't do anything?
They want you to prepare the budget for 3 months, so we prepared for 3 months.
But they didn't mention 3 months, right?
So you make for me also. Make for
Okay,
me.
okay, okay.
Opening balance would be 462,000.
Yeah, then you add 30%,
30% of 18,000
18,000.
units
That
into
would be
55
6,000 into 55.
comes up to how much?
Wait, miss, maybe 18, 55, 297. The 297 comes for this May.
Hmm.
And then your closing balance carried on will be 462 only.
Yeah. Okay.
Yeah,
The receipt of January na, of this, then balance carried down will be 297,000.
yeah,
Okay.
yeah.
So this is what we did. Now you have one more worked example. They want the trade receivable budget for March, April, and May. Okay. I want you to try this sum yourself. Once done, you will message me.
So miss,
So this is
so
the
they,
other worked example, and they
yeah,
want you to prepare trade receivable budget. Okay, tell me.
yes, miss. So they asked to prepare the trade receivable budget from March to May. So they have given us the balance brought down for the March from the
March,
Feb
April,
sales.
and May.
Yeah. So the balance brought down would be 7,500, which is the trade receivables.
How?
They
This
have
is
given it,
the
miss.
revenue budget of Feb, March, April, and May.
Yeah, yeah,
So this is the sales of Feb,
yeah.
March. So sales of
Uh,
Feb, March, April, and May
yeah.
is how much?
Feb is 15, March also 15, April 20, and May also 20.
Okay. Then
So, miss, for the trade receivables, first we start off with the balance brought down, which for March is 7,500.
can you read the terms and explain me what are they telling?
Okay, 50% of customers pay in the month of the sale. taking advantage of a 4% cash discount. So, miss 50% of the sales uh, from Feb to March, they get a 4% discount. So, Feb's revenue was 15,000. So, 50% of that, so
50,
7,500.
I want trade receivable budget. So am I
Yeah,
interested to know whether,
not, no, not really.
okay, not really.
Yeah,
Okay. So 50% of the people pay me. Okay.
yeah. The remaining 50% of the customers, they pay in the month of the sale later, which is your trade receivables.
They pay in the month after the sale.
Yeah. So your
So this remaining 50% for the Feb sales, I will receive money in March.
March. Yeah.
This I will receive in,
April,
this I will receive in
May.
May. And this April. This I will receive in May and this I will receive in June.
Yeah.
So the
So
balance begin down. Yeah, tell me.
so the balance began down from for March is 7,500 because they've mentioned it. The value of trade receivables at first March was 7,500 pounds.
But can you still find from here?
Yeah, miss 50,000. 50%. Sorry, 50% of the revenue of Feb is
Yeah, so the
7,500.
balance begin down of the March would be
7,000.
7,500.
Yeah.
Okay. Then in
So
the month of
again,
March,
so in the month of March, they again have a sale of 15,000 revenue. In that, also 50% of the customers are paying upfront cash, and the other remaining 50% are paying credit.
so the credit sales for March will be how much?
It will be 7,500 again.
So credit sales for March will be 7,500.
Yeah.
Okay.
So you will just subtract it.
Then what you received?
Miss, you've received 50%, so it will be 7,200. You've received 7,200.
Why 7,200 you will receive?
Okay, I mean, so 50% of the customers they pay in the month of the sale. So 50% of 15,000 is 7,500, and if
This is
4% is
7,500 I received, and
yeah, yeah,
7,500 would be credit sales, right?
yes,
But can I write the entire thing as credit sales, or will I have the irrecoverable debts?
yeah, that's what. Miss. So irrecoverable debts. So 1% are regarded as recoverable debts from your credit sales. So you
Okay.
will have to subtract 75.
7,500 into 1%, 75.
Yeah, so you will be subtract
Irrecoverable debts would be 75. So the credit sales would be
uh 7,425.
7,500
Huh?
minus 75.
Yeah, 7,425. 7,425.
So
Yeah.
how much will you receive in this month?
So in this month you will receive 7,500 only. And yeah,
Hmm?
this month you'll only receive 7,500.
But 75 you treated as irrecoverable debts last month also, right?
Yeah, but it's for yeah. So it'll be 7,425. When you subtract it, your balance again will be 7.5.
Hmm? 7425, na?
Wait, no, miss. Credit sales. Miss, you subtract the credit sales, right? It's the same number either way. Yeah.
Okay. For April.
So then again for April, your balance brought down will be 7,500.
Hmm?
Although April's revenue was 20,000, so 50% of 20,000, which is 10,000, will be your credit sales.
Hmm?
And what you will receive is again the credit sales, which is 7,500
But 7425 would be for
for
the previous month this, and
credit.
75 for irrecoverable debts.
Wait, no, because they have different revenue.
Same was there na for Feb and March.
Yeah, same revenue for Feb and March.
So same amount, right?
Yeah,
So 7,000, 1% was irrecoverable debts.
yeah,
This 7,500, which was the credit sales of this month, in that we treated 7,425 as the credit sales and 75 was irrecoverable debts. So
yeah,
once they pay us, that means the irrecoverable debts is wiped off.
yeah.
Okay.
Ah,
So
okay.
the
Yeah,
balance closed down is 10,000.
yeah.
Now opening balance of May would be how much?
10,000 again, and credit sales would be again 10,000. Then you will be subtracting uh 1% of 10,000, which is 1,000. Wait, no, that's 100.
100. So
Yeah. So it
irrecoverable
will
debts would
be,
be 100
yeah,
and
and you will receive
3,000.
9,000. No, 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 not 9,000.
Why not 9,000?
It would be 900, 9,900, right? Because you're subtracting only.
9,900.
Yeah. And then your balance brought down would be 10, 10, 20. Yeah, 10,000.
10,000.
Yep.
Correct? You understood the trade receivable budget
Yes.
and the irrecoverable debts part?
Yes.
Okay, fine. This format is,
Wrong.
we are not doing it by this format, right?
Yeah. But it's the same thing, Miss Cynthia.
But they write the revenue first. Then
Yeah,
they
yeah.
minus the current receipts, then they minus the cash discount, then they minus the previous receipts and the previous irrecoverable debts. You still get
It's
the
time consuming.
same closing balance. That's okay.
Yep.
What will the trade payable budget show you?
Okay, the trade payable budget. I remember. Miss, so you will get your balance brought down from the previous month.
So it
Basically,
will
how
show you
much
the amount that you owe to suppliers,
suppliers? Yeah, that's what. So the amount
that
you
you have
owe
to
to
pay.
suppliers each month. Yeah,
It will show you the amount that you have to pay at the end of each month.
yeah,
Okay. So it will also have an opening balance.
yes. Then it'll have your credit purchases.
Okay. And then it will have the payments and the
Yes.
closing balance.
Maybe even discount if there is any.
Maybe even discount. So I wanted to try this sum out and then I will come back.
Okay.
Okay. So we have purchases for Jan, Feb, and March,
Yeah.
right? So purchases for Jan is how much?
Six hundred
In
forty-one
meters, it is
thousand.
95,000 and the purchases is 641,250.
Yeah.
So whatever I am purchasing in the month of January, okay, that is 641,250. Okay,
It'll be owed on February.
641,250. 40% I will pay.
Yeah.
40% I will pay in Jan itself.
Yeah.
Correct?
Yeah.
25% I will pay in Feb.
Yeah.
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 And 35% I will pay in 2 months back.
So March basically.
March. So 25% I will pay in Feb and 35% I will pay in March.
Yeah.
Similarly for February, 438,750.
25%.
40% I will pay in Feb.
Yeah.
25% I will pay in March.
March. And then they don't have, I mean, yeah, April.
35% I will pay in April. For the month of March,
Yeah.
219,375. 40% I will pay in March.
Wait. This is 40%
25%
of
I will pay in April. And 35% I will pay in May.
May.
Are you with me?
Yeah.
Now, in the month of January, Whatever I am purchasing, I will not receive the 40%.
Yeah.
Okay. So in the month of January, my credit purchases would be what?
160,312 plus the remaining 35.
641 250 into 30
Into
40 50
50%. No, no, no. 35, 5, 40,
60%.
60%. Yeah.
So my credit purchases would be okay.
2641.
So my credit purchases in the month of January of the full month
384,000.
credit, the 25% will be how much?
25%. I forgot. Wait. 25%.
It
50.
will be 16320,
160.5.
and the 35% will be how much? 224437.
Yeah. 224, 437.5 again. Yep.
So the balance closed down will be how much?
The addition of both.
641 250 into 60%. 384 750. Yes?
Miss, I think you wrote the wrong number on 35%. It's showing 22,437.
Yeah, it's 22 437, right?
35%? No, miss.
So
It'll
2
be
lakh
more.
2,24,000. 2 lakh
Alright,
22 437. Sorry.
yeah.
Okay.
Yeah.
Okay. Now we go to February. What would be the balance begin down
February balance begin down would be 160 only.
by 160?
Because
Credit
25% is on
purchases
one
our
month credit.
balance begin down, right? What is the
No,
closing
miss.
balance over here? That will be the opening balance here.
No,
384 750.
but miss, your 35% is on 2 months credit.
Darling, but still that is the balance begin down, right?
Yeah.
The closing balance of Jan has to be the opening balance of February, right?
Okay, then you subtract only the 160. Yeah.
Then you will write received, right? Then you will
Yes,
write
yes.
what you have received.
Yes, 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 yes.
And what you're going to receive over here is how much? 160,312.5.
Yeah.
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 And same thing for the January sales, 224, 437, 224, 437.5. You're going to receive for the Jan sales, correct?
Yeah.
Are you with me?
No, no, no. You're only receiving 1603125, miss.
Jan. For the January say purchases that you have made,
Yeah.
25% you will receive in Feb and
Receiving Feb.
35% you will receive in March.
Miss, but why are we doing receive?
You will have to subtract na to find the closing trade payables.
Yes, for 50 hours, Feb you'll get 160. Then for March you'll get 224.
Yeah, so I will get in February 160 and I will
Yeah.
get in March 224.
Yeah.
This is for the January sales.
Yeah.
This is for the January sales that I will receive in the month.
Yep.
Okay. And in January, what I'm receiving, I don't know anything because I don't have previous balance.
Yeah.
Now talk about February. What is the credit purchases of February?
The total credit purchases for February.
25% and 35%. Give me separate calculation.
Okay. It would be
109, 687.
no, miss. Oh yeah.
20.
Yeah, yeah.
25% of 438 750 into 25%, 109 687.
Yes, and then the 35% will be 153,562.5.
153 562.5.
Yeah.
And in the month of February, I'm only going to receive this.
Yep.
Okay. Now we will immediately do the calculation for this. This
Yes, and that
25% when will I receive?
what, miss?
This 25% when will I receive?
You will receive it in March.
So this 25% I will receive in March.
Yeah.
So 109,687.50. And the remaining I will receive in April. I don't need calculation for April.
Not yeah.
Are you with me?
Yep.
Okay, fine. Now balance closed down for February.
For February. Okay, yes, you have to have that.
So we had 384 750 plus 109,687.5 plus 153 562.5 minus 163,312.5. So it is 487 687.5, and this becomes the opening balance of March.
Yeah. That'll be pretty much.
Okay.
Yeah.
Now March 25% and 35%.
Fifth.
219,375 into 25%. Yeah, tell
Yeah.
me.
So it's 54,843.75.
58,843.75.
Yep.
And the 2 months will be 76,781.25.
25. Yeah.
What is the balance closed down? What I receive will be subtracted.
Yeah. We'll have to add everything first.
It is 487, 687.5 plus 558, 843.75 plus 76, 781.25 minus 224437.5 minus 109,687.5. So this becomes
289, 187.5.
289 187.5.
Yep.
So this is the trade payable budget. Okay.
Yeah.
Are you with me?
Yeah.
Capital budget now. What is capital budget? You know?
Yeah. The
What
the
is the
amount of
capital budget?
total amount of capital you have
So
for
capital
the.
budget is basically a plan. What plan? It is a plan for raising long-term funds.
Yeah.
You write along with me. Plan
Yep.
for raising long-term funds for your investment in non-current assets. Okay. So whenever your business starts, it will need capital to start its operations.
Yeah.
And this capital that it will need to start its operations becomes a part of the capital budget. Okay. So the
Yeah.
capital that you need to start your operation becomes a part of your capital budget. Now you look at this worked example over here. So it says Nikki and Antonia are starting a design for life, and the new company is going to incur these expenses. What is these
Hmm.
expenses that the new company is going to incur? Lease
The lease on the properties, which is
shared
100.
equipment and motor vehicle. Can
Yeah.
you give me a total of how much money they will need?
Okay. 140, 20, 160, 160, 15, 175,
140,000 plus
180,
20,000 plus
175,
50,000 plus 55,500. So they need a total capital of how much?
230,500.
So they need a total capital of 230,500.
500. Yeah.
Capital for the new business will be funded as follows. So this is the way the capital for the new business will be funded. Nikki is going to purchase shares to the value of 35% of sum required. So
So it
Nikki is going to purchase 35% of the sum required shares.
so that would be
So how much?
80,675.
So it will be 35% of
Yeah.
230,500. So it becomes
80,675.
80,675.
Yeah.
Antonio will purchase 30% of capital required.
Uh,
30% will be purchased by Antonio. So it is 69,150. Are you with me?
Miss,
Bank
give me one
loan.
sec.
Just finish this off.
Okay.
20% will be the bank loan. So
Yes.
20% of 230,500
Yeah.
becomes 46,100. And balance will be funded with share purchase from family. So the balance is how much percent?
To 35,
5
30,
plus
65,
30 plus 20 plus
85, 15.
15% will be family share capital.
Yes. So it would be
30.
34,575.
So the total capital that is required is how much?
230,500.
So the total capital that is required is 230,500. Are you with me?
Yes.
Okay. So this is how the capital budget is prepared. Now this case study is there and the homework is there. Okay, so you will complete this capital budget case study
Hmm.
and complete the homework.